Hello and welcome to BloombergQuint. In the last week or 10 days, there have been two major events that have happened, the budget and today the Reserve Bank of India monetary policy. Now, various things have been said and written about all of that. One specific aspect that we want to focus on here in this conversation is the banking sector. In the budget, there was a recapitalization amount of about 10,000 crore that was set aside. A day before that, the economic survey had actually suggested something quite dramatic, that you set up a bad bank-like structure and take all these bad loans and put them there and some ways cleanse the banking system. Today at the RBI Monetary Policy Press Conference, two deputy governors, the new deputy governor Viral Acharya and Mr. Vishwanathan, both said that it's an idea which can't be ruled out. They said we have to think of all options. To discuss the health of the banking sector and also this idea of a bad bank, we've got Hemindra Hazari with us, independent analyst and perhaps one of the longest watchers of banking sector stocks and banks in India. Longest? How long, sir?
I've been there for some time.
You don't want to put a number to it. So let me start with today actually. Till, and this is not about personalities, but till the last governor was here, he had said a bad bank is not an option, a public sector bad bank. Let the ARCs handle this bad loan problem. Today, the RBI for the first time has said that it is an option. Firstly, I want to get your first thoughts on the idea, the concept of a bad bank, and then I'll get into specifics.
See, the concept of a bad bank is just like the concept of an ARC. Now, the thing is, ARC in India has not been really particularly successful. Because one, when you sell the assets to the ARC, you have to take a big haircut. Now, banks today really do not have the capital to take that type of haircut. Second is that who's going to fund the bad bank? Is the government going to fund it? If their generosity is to be seen, you have seen this in this budget, that for such huge NPAs, they're providing 10,000 crores to the entire PSU banking sector. In my opinion, that will just provide for about 2 corporate accounts. So if this is the generosity that the government displays when there is an acute crisis in the Indian economy and in the Indian banking sector, what is the kind of capital are you going to raise for the bad bank? Now the issue also is these NPAs. The government always says that they are very tough, but what have we seen? Mr. Malia, who travelled abroad in first class, with numerous bags, he was allowed to do that. Otherwise, you see, civil rights activists cannot leave this country; they are stopped. But Mr. Malia was allowed to go. So obviously, there is a connection here, and the whole issue of is that today you have these couple of large corporates who have absolutely ruined the banking sector. They have taken monies at highly inflated project costs. They've siphoned off these monies and they've parked it in foreign banks abroad. Now the government could have easily targeted them. They could have used the Enforcement Directorate, they could have used the Central Bureau of Investigation, and they could have just thrown a couple of them into jail. And if they had done that, then all the other errant corporate borrowers would have come running to settle their dues. Now instead, what has the government done? They've
thrown a couple of bankers into jail.
They've thrown a couple of small PSU bankers into jail. They've carpet bombed the entire economy to go after black money when they should have really done some surgical strikes against these corporates. They've done nothing of that. So what is the signal you're going to send? So even if you have a bad bank today and you transfer these assets at whatever discounted prices and take a huge loss for the banking sector, how are you going to recover the money?
No, absolutely. I just want to, listen to Viral Acharya. I just want everybody watching to listen to Viral Acharya, because it's not like he said that we are going to do it. He said that it's an option, and he said it has to be designed right. And then I'll come back and pick up that conversation on the design of a structure like this.
I don't think a bad bank just by itself will necessarily work. I think it has to be designed right. The big piece of the problem is, can you get the bank to sell the assets at the right price to ARCs and private investors who want to come in? How to get that right price to come in using a portfolio or a bad bank kind of approach, I think that's going to be key. We're going to be thinking about what kind of design issues might help with that, but we think it is something that, if designed properly, could help.
We can't see this paper, but I've written bad bank here. Now let's start by seeing how this will work. Step number 1, sir, what will it be? That you take all NPAs and transfer, or you select the NPAs that need to be transferred? How will it work as first step?
Well, the first step obviously is you have to take, whether you take the entire bad NPAs again, can the banks take that type of hit? Because all these NPAs will have to be sold at a steep discount.
So they will be sold at a discount, right?
Obviously.
Have to be.
Yes.
And who decides on that discount?
So that will have to determine whether the bankers decide. This is just like an ARC concept. The concept is today it's operational in ARCs. Now ARCs cannot handle very large corporate accounts because they have a limited capital base.
Yeah.
So the mechanism today is there in the economy in the form of ARC. So finally, once you mutually agree what the price of the asset is, then someone has to take the loss, and normally it will be the banks who will take that loss. Now the thing is, do they have adequate capital to take that loss? Obviously no.
They don't.
So now the question then arises, how can it work? Because if the government is going to just give you 10,000 crores for the entire sector, where is that additional capital? So is it going to be a stillborn, birth? One really does not know.
So the first step is capital, you're saying. You have to find the capital. You have to first put the capital into banks, but you also have to capitalize the bad bank, right?
Exactly. Now,
so you need double capital.
Exactly. So where is this provision in the budget? The budget, all it says is there's this measly 10,000 crores for the banking sector, which is much lower than what it was earlier. And this on top of demonetization, which is the self-inflicted wound that the government has given the entire economy. So there's going to be huge additional NPAs, which mind you, we have not seen so far in third quarter results. That's all yet to come. So we had this huge mounting NPA anyway. There's going to be this fresh wave of NPAs because of demonetization really coming from the SME sector. And after that, we're going to have retail NPAs, which nobody talks about today.
Yes, which will probably happen when
there's
today
everyone
job
is
loss cycle.
In their analyst presentations, if you see, they're very proud of the fact that they are de-risking their balance sheet by going into retail, not realizing, of course, that's where the future large NPAs are going to come from the banking system.
And we've already seen that cycle once. Okay, so coming back to it, first problem is capital. We don't have the capital. Second problem is who decides on the hit. PSU bankers right now are all scared. They don't want to take, dramatic decisions because who knows who's going to come after them 3 years or 4 years later. So then there has to be an oversight committee, Sajay, perhaps?
Perhaps, but finally the decision has to be taken on what is the valuation. Now this is very interesting because today those assets in many cases don't exist because they were all fictitious assets which they were lent on.
Yeah.
So the assets don't exist. So straight away there has to be, there has to be a markdown of 20 to 30% on some of these loans straight away.
That's a low estimate. Some people say as high as
so the asset does not exist. On top of that, we have to see because of this slowdown, then because of some of the money is being siphoned out, because of whatever, they could not put up the project, then there are those additional losses. So you're looking at a very huge hit for the entire banking sector. Now, mind you, in any economy, you do get these boom and bust cycles.
Yeah.
Now, the whole issue is in a bust cycle, the government has to step, especially when they are their own banks. And a lot of these assets, mind you, it was the government's direction to go in for infrastructure lending. It was not on the own, adventurism of the PSU bankers. Of course, a lot of the new private sector bankers also jumped into this bandwagon on their very own.
Absolutely, the kind of surge in NPAs you've seen on Axis and ICICI.
If the government pushed these banks to push it for development of the Indian economy, then it's the government's responsibility also to recapitalize them if the government wants the economy to come out of this bust. And unfortunately, today nobody discusses the actual state of the economy. Most business studios you sit on is always, the recovery is going to come in the second half. And only inflation is the worry. Nobody talks of this low inflation being linked to low growth and low employment. That nobody seems to be concerned, or even the RBI. It's always inflation, how sticky it is. The very fact that inflation is low is also an indicator how poor the economy is doing, and that is why prices are low. There's a price deflation going on which nobody wants to talk about.
And that low growth, or at least that subdued growth, is probably going to prevent some of these NPAs from turning good over as well, right?
Yes, definitely.
That recovery potential is not there in NPAs.
Correct.
Okay, so that's the second part. So first you have to do the NPAs, you have to do the structuring. But at the end of it all, would it not just be simpler if the government put this money into PSU banks and allowed them to provision actively? Because if your book is provisioned well, then you're not in as much trouble as you are now.
See, it's very interesting. Now what Mr. Arvind Subramaniam says in this latest economic survey is that essentially the state should write off these loans. That's what he's arguing in this economic survey.
Not write off. He hasn't
but
said
basically, the state has to provide for that.
Yeah.
The state has to fund the... You see, I have no objection to that. But you have to go after these errant borrowers, because what is the point of throwing good money after bad? You have to change the management in some of these companies, or you have to hand these companies over to some business party who has got a reputation of handling businesses well. whether it be a major business house which has always met its loan commitments, or a top-rated PSU itself. The NTPC is there. You can hand over these assets at a discounted value. At least then you know that is a going concern. Because if you keep funding these same borrowers who have siphoned off the money, then again you'll be just fattening their own shore bank accounts.
No, but that's what they're saying. So if you put it in this bad bank, then it can be subsequently sold off to the right investor or the right company, etc. That this will be an agency which would be concentrated on actually selling off these assets. Do you think there's some merit in that? Or actually, bankers have argued that it's the other way around, that they have dealt with accounts for a very long time, and if they are not involved, the people who will come in will probably have no history, background of how these accounts have functioned.
See, today all this has been happening in the ARC, but the ARCs themselves have not been very successful.
Yeah.
And they have not been very successful in some of the smaller accounts. So in these large accounts, as I said, you need government intervention in a major way to discipline these borrowers. Because without that discipline, the signal goes out that you can merrily scam the banking sector, which has been done for a long period of time. And the same companies you notice are coming up over and over again. The same companies which were there in the early, the late 1990s when there was a slowdown, are finding the same companies again in the same. So they have obviously not learnt any lesson, because government does not want to teach them a lesson. So I have no problem if the state wants to recapitalize them, but I do have an issue when you allow such people to go scot-free. Because today as individuals, you and I, if we default on a bank, they will take our house away, they will take our personal guarantees away, whoever relatives, friends who have given it. But when it comes to corporates, you see that they seem to be in a different world altogether of discipline.
So this may end up being more of a moral hazard than, the banks will say, okay, not our problem anymore, the corporates will go back. I mean, you can't prevent them from lending more because, some of the largest corporates.
Yes, I really don't see any change happening even if this concept comes and, is an operational concept, because if all these other practices remain, you're just throwing good money after bad.
So what would you suggest? If you had to solve this NPA problem, what would be your top 3 suggestions?
Oh, number 1, I would unleash the Enforcement Directorate, the Income Tax and CBI onto these borrowers.
Borrowers, not the lenders.
Not the lenders. They will also come in automatically. But today, if you notice what is happening, you're seeing some few small-time bank chairmen, get caught and, they have to show like, oh, this is the way we... But you don't find any large corporate in this net at all. You had the SR tapes, which is evidence out there, but no one wants to talk about it, especially not in business studios. So these are all these evidences there, which is there in the public domain. So I would unleash the state's enforcement agency. That's what they're there for. They're there to protect taxpayers' money, that yours, mine, and all your viewers' taxpayers' money, and all the indirect taxes we pay. That's what, So once you do that, then frankly, you don't need a bad bank, you don't need an ARC.
Because you're saying they have the money, they'll pay up
Exactly, they will pay it up. But today, look at Mr. Vijay Mallya's lifestyle abroad. Do you think he's starving? Do you think he's without a home? Not at all. So who has financed all that? His entrepreneurial spirit? Do you think that is the case? So if you unleash
So that's
them,
one aspect, that, let's get tough with these guys.
You have to get very, very tough.
What's the next? How do you get to the banking balance sheets?
So then once you get to the banking balance, then let them come. They will all run. Believe me, they will run to the bank to settle their dues. Because if they know they're going to spend their time in Arthur Road jail, then yes, they will come. They'll jolly well come. And once you do that, 60-70% of your problem is over. But in this country, normally it is the low income people are thrown into jail, and the high income have a very nice lifestyle, and nobody asks them any questions.
In all of this, we have all forgotten about privatization, or even the thought that the government can bring down stake in public sector banks. But the problem right now is that nobody will buy that equity, right? Or will they?
See, I have a different view altogether. I believe that in certain critical industries, banking being one of them, government must always have a majority stake, especially during an economic slowdown. Because during an economic slowdown, private sector globally, they will not take risk, naturally so. The only entities which can play a counter-cyclical role is the government. And therefore, if you privatize your banking industry during a slowdown, one is of course there may not be takers, but let's assume there are takers, then the privatization and the private entities who control these banks will be risk averse. And in an economic slowdown, you want banks really to lend more. because that is one of the triggers to get the economy out of its slowdown mode. So therefore, if you privatize them, they're going to become risk averse. You look at the state of the new private sector banks. They were set up in the early 1990s. They hardly went into rural India. They just remained concentrated in the creamy layers of metropolitan India and built up their profits. Of course, some of them even had a disastrous business strategy and they failed.
Yeah.
But they just focused on the profit. They are not concerned with the development of this economy.
Sure.
So if you were to now duplicate that strategy with the government banks, then you're going to see a huge polarization of Indian society, which is already happening, by the way. And then you will, you'll have a Trump as your leader, because the media will not catch all these underlying trends because they are so immersed with the,
Can we stay with bank bashing?
Yes. So the issue here really is that the state, in my view, must have majority control because it can play a counter-cyclical role. And this was seen definitely in the post-Lehman crisis. You see, 1 year there was a huge fiscal expansion which resulted in higher growth, higher corporate earnings. And then when the markets as usual get excited, when there's fiscal deficit expansion, when the government withdraws fiscal deficit, they push the PSU banks instead to do infrastructure and a lot of the lending, which again gave some, stimulus to the economy. But thereafter, with the slowdown, they contracted that, and today we're in a mess.
Feeling the stick. So privatization, you don't think is an answer? That incidentally is one of the things that Viral Acharya has suggested in some of his writings, that privatization may be the answer.
You see, they all come from the same school of thought, which they believe that you must allow the market to function.
Yeah.
You must allow the private sector to come in, and the economy will bloom. But unfortunately, what have we seen in India? We've had numerous reforms. But actually, what has happened to employment growth and corporate earnings? It has all stagnated in the last 3 to 4 years.
Yeah.
It has also, synchronized with the contraction of the fiscal deficit.
Sure.
But everyone likes to say we have to consolidate even more, and this is a very prudent fiscal strategy. Actually, to me, it is the very cause of all your problems today in the economy, because you're contracting the fiscal deficit. So such is the wisdom that you find with most economists, and of course, I may add, in most business TV studios.
Okay, we'll take that criticism on board. Last question though, Mr. Hazari, before I let you go. So I mean, if you, I don't know if you're still in the markets or not, but if you were in the markets at this stage and looking at the banking sector, would you still be bearish on it, or would you think that the NPA cycle has peaked, that things will improve for now? Just to get a one sense of your view on banking right now.
It continues to be negative, and it is negative because the fiscal deficit continues to contract. The total central government expenditure GDP is again going to become lower in FY18 if you look at the projections. You're seeing a very miserly recapitalization by the government. So where is the stimulus to the corporate India, to agrarian India? Where is the stimulus to employment? No. And plus, on top of that, you have demonetization, which the impact is going to be felt. So you're going to see considerable pain. Of course, the economy has had considerable pain now for 3 to 4 years. So that is going to continue. So we are going to be in a period of secular stagnation.
And the banking sector always reflects the economy.
True.
So it has to. Thank you so much, Mr. Hazari. That was a conversation on the bad bank concept and the banking sector. Thanks for watching BloombergQuint.com. Do catch all our coverage of the monetary policy and of the banking sector on the website. Thanks for watching.